Great. So thanks everyone for joining us on our session today, Basics of Governance and Accountability for Microboards. This presentation is the second step in our usual introduction to microboards or introduction to legal aspects of microboards presentation. I will go into some legal aspects for a little bit, but if there are any questions, just let me know. We are a pretty small group, so feel free to raise your hand or ask questions in the chat. Before we start, I'd like to go through a little disclaimer because I am a lawyer, just to say that Microboards Ontario and PooranLaw Professional Corporation are providing this as general information only. Any of this information is subject to change, and I will not be your lawyer as a result of this presentation as much as I would like to be. So just to give you that bit of disclaimer, we'll get into a bit of an introduction of what a microboard actually is, the legal aspects, like I mentioned before, the role of certain persons in the microboard, the directors and officers, and then we'll get into the duties of directors and officers, either common law or statutory duties, and finally, certain filing requirements that are required once you've incorporated a microboard, including financial requirements. I'll first turn it over to Karen to talk about what a microboard is.
Thanks, Saquiba. And I won't take up too much time on this because I know most of you do know what a microboard is. But just as a reminder, a microboard is when a group of friends and family join with a person with a disability and they form a not-for-profit organization. That not-for-profit has one purpose, which is to support that person with making decisions and living their best life by supporting them in having a feeling of autonomy and self-determination over their life. I guess we can move on. Sorry, you're controlling the deck. The microboards are actually founded back in the late 80s by a couple, David and Faye Weatherow, who wanted to set up a future plan that was sustainable and person-directed for their son. And this is the foundation on which microboards have been built ever since. I'm just going to read it out for it because I know it's a low contrast. A microboard based on the spirit of a family and circle of friends has various advantages compared with other models of support for people with disabilities. It's smaller, more intimate, more direct, more responsive, more enduring, and supports relationships and community connections. The Weatherows connected with an organization called Vela Canada out of BC, and Vela Canada built the framework and the principles on which microboards are still built. They actually trademarked the microboard's name, and the following, and if you become a microboard or call yourself a microboard, it's asked that you align your microboard with these principles. The first one is that relationships are the most important component of a person's life, and we all know that's true. It's our friends and our family who we turn to when we have decisions we need to make, when we need some trusted information, or we just want to talk through an issue. People have the capacity for self-determination. Everybody wants to be able to make their own decisions, and everybody has the capacity in some way to express what it is that they like, what they don't like, and what it is that they would like to do. Planning and decisions made with the person are based on their strengths, needs, wishes, and goals. A microboard is very much a supported decision-making entity. And the last one is that everyone has gifts to share. Everybody wants to share those gifts with the community and their friends and family around them and have those gifts respected and included in the community. In Ontario, you may have also heard the word aroha. That's started by a family called the Bloomfields out of Guelph. And it is the Maori word for love, very similar to the principles of the microboard, that love is at the heart of relationships and at the core of our lives. It is also an incorporated entity, much like a microboard, and it also is a supported decision-making organization that makes sure that the person is at the center of every decision and is supported to make those decisions in their life. just a bit about what it looks like. A microboard should have 5 directors, at least 5 directors. Some we know have as many as 9 or 10 or 11. The person for whom the microboard is created may also be a director themselves on the microboard. And we say a minimum of 5 because that gives a breadth of voices, breadth of perspectives, experiences, and ideas. So if you have less than that, you're kind of limiting the creativity of the microboard. All directors should have a personal relationship with the person. Just like a nonprofit organization, all directors of the microboard should be unpaid. And generally, we have just 1 microboard per person. And then lastly, before I turn it back over to Saquiba, what is it not? It is not a substitute decision maker. A microboard has no control or authority over a person or their life or their decisions. They are there to support that person with making those decisions that are important to them. A microboard cannot be a trustee of the Henson Trust or any other sort of trust. A microboard can appoint the trustee or the trustee company, but it cannot be named itself as the trustee. And with that, I will turn it back to Saquiba.
Thanks, Karen. So we'll get into some of the legal aspects of a microboard. Some of this may be repetitive with the 101 or the intro to legal aspects of a microboard course, but I think it's important to get into, and we'll get into certain more onto the incorporation as well. So the first question we often get is, if I'm setting up a personal support network, why do I have to incorporate it? What's the point? If the personal support network is lasting, is there any point to creating a not-for-profit corporation? That's essentially what you're doing with a microboard. You're incorporating not-for-profit. You're putting together a board of directors and an actual corporate structure. The key tenet that Karen had mentioned is we're trying to support a person in making decisions throughout their life. We're doing this through this incorporated structure, or really formalizing a personal network. So you're creating a formal legal structure. And what it really speaks to is sustainability. Karen mentioned Bella Canada, which is a well-known organization in BC that does work with microboards. And they actually have data that says that personal support networks that are incorporated in terms of longevity far exceed those that are not incorporated. And really what you're trying to do here is, through the incorporation, you're trying to create buy-in for the directors to stick around and take the position seriously. So when there's a legal obligation, the idea is that they likely will take it seriously, and they'll want to stay on the microboard for a while. The microboard could also be a formal repository for individualized funding. It gives it some credibility if it's incorporated. By repository, I mean any kind of funding going to the person, passport funding or other ministry funding or supports, could potentially flow through the microboard to the person. So the microboard could actually be a medium between planning components of the person to promote financial security. What I mean by that is the microboard could interact with the various sources of funding, passport or other ministry funding. It could interact with trusts such as the Henson Trust, the person's RDSB potentially in the future or now, their ODSB, and so on. So basically, the microboard could look at all of these sources of funding, the assets of the person, and determine a financial plan and actually flow some of these funds from the microboard to the person themselves. The microboard could also manage home and residential supports and potentially engage support workers. So the microboard could be the employer and hire employees and contractors, which removes some liability from caregivers. The microboard could also promote succession planning. I think this is one of the big reasons why families or friends want to put together a microboard. It's the idea that you're setting up the microboard while parents, legal guardians, or caregivers are living. And you're ensuring that the other persons involved with the microboard, the other directors, understand the plan for the person at the center's life, the person supported by the microboard. And so when caregivers age, the other directors are able to take on the decision-making and responsibilities because they've sort of learned it while caregivers were living or younger. A microboard could also strengthen applications for support. So if there's applications for funding dollars, for example, individualized funding dollars, if there's a microboard that's part of the overall plan, that could strengthen that plan. Again, speaking to the sustainability piece or the succession planning piece. You know that you have people who are there, who are committed, who have a legal obligation to the microboard as a not-for-profit corporation. And B, you know that there's a succession plan when the main persons who are driving this microboard, likely the person supported or their caregivers, age or they pass away. Because we're talking about the incorporation of a not-for-profit, I wanted to get into the structure of a not-for-profit corporation. We've got that here on the screen. If you're familiar with for-profit corporations, a not-for-profit is very similar. When you have a for-profit corporation, there are shareholders who own shares of the corporation. In a not-for-profit corporation, members act like shareholders. They're very similar, but members don't hold shares in the corporation. They register and have an interest in the corporation. Your members are the ones who attend the annual general meeting and elect a board of directors to oversee the management of the corporation. Out of the board of directors, which is my orange triangle here, you may have certain officer roles that are appointed, like your chair, secretary, or treasurer. And then the board may also want to appoint certain committees. You'll see that on the right side, such as a finance committee or audit committee or governance committee. The committees are usually formed when the organization is bigger. For the purposes of a microboard, you might have something like 5 members, which are your 5 family members. Out of the members, you may appoint all or a subset of the members to be on the board. And then you may have the very simple general officer roles like a chair, secretary, or treasurer, or even just a chair. When you're looking at incorporation, the first thing you want to look at is the jurisdiction in which to incorporate the microboard. What I mean by that is when you incorporate a not-for-profit, you can either incorporate it provincially or federally. Right now there's new not-for-profit legislation in the province called the Ontario Not-for-Profit Corporations Act. This was enacted in 2021. Before it was enacted, we used to incorporate under federal jurisdiction instead, but now you could really do either, depending on where the microboard operates. We've got some factors related to jurisdiction here. Both of them have electronic systems, which are great. If you're operating in Ontario or Canada, you could do either. They have different reporting thresholds that we'll go over. And one allows for ex officio directors and one does not. By that, we mean directors that are appointed by virtue of their position. In terms of an application for, oh, sorry, I just turned off my video. Okay, my video may not be working. Sorry about that, guys. In terms of an application for incorporation, there's certain items to take a look at. One is the corporate name. You'll have to do a name search and reservation for that. The other is members. Certain classes of members will be named in the microboard. Usually by default, there's one class of voting members. The names of the directors will be included in the application for incorporation. So the names, the contact information, either address or email or both, a minimum and maximum number of directors, the head office, which is usually the residence of the person themselves, the purpose statement, which is very important for the not-for-profit corporation, and then certain special provisions related to the not-for-profit corporation as well. I think we had a question here. Are there further pros and cons with regards to federal and provincial incorporation? Let's take a look back here at our jurisdiction. Like I mentioned before, there's new not-for-profit legislation in Ontario related to not-for-profits generally. Before this new not-for-profit legislation came into place in 2021, we used to encourage incorporating federally under the Canada Not-for-Profit Corporations Act. Now, because there is the new not-for-profit legislation in Ontario, you could actually incorporate under either. There really isn't any pros and cons to either, other than the reporting threshold that we'll go over together. The reporting threshold is dependent on the annual general revenue. In terms of incorporation or making changes, they're both relatively the same. Now you can do them both online. Once you file the incorporation, it's done pretty instantaneously. The other pro or con is that ex officio director, but for a simple structure like a microboard, I don't know if you really want to have ex officio directors, such as a past chair, for example, that comes back as a director. So you're really just looking at the annual general revenue and that reporting threshold for your financial statements. I hope that answers your question, Al. So like I mentioned before, these are the items required for your articles of incorporation or an application of incorporation. Oh, question here. Oh, you're welcome, Al. And then once you are incorporated, there's certain post-incorporation requirements. Every not-for-profit corporation has to have a set of bylaws, which are the general governing rules of the organization. You'll also have to have a first meeting of the board or first meeting of directors, and then you'll have to have a first meeting of your members. The first meeting of directors should take place right away, and they should occur periodically. Sometimes directors meet quarterly or even more often, but sometimes you should also have a first meeting of members 18 months after incorporation, and then at least once a year at your annual general meeting. In terms of the bylaws, here are some items that are included in the bylaw itself. The bylaw should contain provisions on your members, directors, and officers, and meetings of members and meetings of directors. Some of the provisions related to members are your conditions of membership. So for example, one class of voting members and items related to termination of membership. For meetings of members, you'll have items like quorum, a notice for a meeting of members, what types of meetings of members you could have, an annual general meeting or a special meeting of members. For the board of directors, you'll include items around the term and election of directors or nomination of directors. And then for meetings of the directors or meeting of the board, you may have items like quorum and who can chair that meeting. For officers, we had mentioned the chair, secretary, and treasurers. You might have the roles listed in the bylaw as well as certain duties. And then the bylaw will contain administrative provisions like your financial year end, your head office, method of giving notice, conflict of interest, and so on. Any questions on the legal aspects before I move on to the different roles?
I have a question.
Sure.
Talk a little bit more about the person who is in charge of a Henson Trust, for example, can't be a director. So obviously, like a lot of times that is will to a sibling, and also a sibling would be a director. So I just want to make sure I understand that relationship.
So some of the roles could actually overlap. For example, if you've got the traditional family scenario of two caregivers who have a will with the Henson Trust, for example, and they're leaving a certain inheritance to child with disability, and there's another sibling who's going to be the trustee of that trust, the Henson Trust, when both parents pass away. The trustee of the Henson Trust could be the sibling, but the sibling could also be a director of the microboard as well. So there may be some interaction between the microboard and the sibling as trustee of the Henson Trust when they're looking at that source of funding. But the roles can definitely overlap, and potentially, if there's a guardian at play too, the sibling could potentially be the guardian of their sibling and the trustee of their Henson Trust and a director on the microboard.
Okay, so I thought I understood you to say that if you're one, you can't be another, but you're not saying that at all. So that's great.
No, not at all. I think what we were getting into here, if you're like, this is where we mentioned the Henson Trust, where the microboard is not a trustee of the Henson Trust. It's just that the microboard as an entity itself cannot be named as a trustee of a Henson Trust or any other trust.
Okay.
But you could have overlap of people who are trustees and directors
Okay.
on the microboard.
Yeah, that's what I didn't understand. So thank you for clarifying that.
I see Al here. Question, Al?
I just have one quick question. I did ask this a year or so ago. There may be a different story now, but with respect to the bylaws, I mean, I'm going to assume that they're fairly similar to regular not-for-profit corporations. So there may be boilerplates out there that are fairly general, but are there any that are sort of popping up that may be more specific to microboards that would give you a little bit more to work with?
Not as of yet. I don't know if Karen knows of any. When we incorporate microboards, we usually do our own template, but it's good guidance. And I should have mentioned this, that whether you incorporate provincially or federally here, there are template bylaws out there for both jurisdictions. CNCA, the Canada Not-for-Profit Corporations Act, has a great bylaw builder online to Corporations Canada. And I know that there's a default bylaw out there for the new ONCA legislation, the Ontario Not-for-Profit Corporations Act.
Mm-hmm. And yeah, we don't give out, typically we haven't prepared a template because each microboard is also so different. But what we are doing is putting together a one-pager of those areas that Saquiba outlined. So it's kind of an easy reference so that you know that you've got everything covered when you are putting your bylaws together.
Okay, thanks.
And I recommend when putting the bylaws together, take a look at the templates and keep it simple. What you really want to do is make sure you have these provisions, like the ones related to members, directors, officers, their meetings, and then have the very simple administrative provisions that a bylaw template or builder will usually recommend.
Thank you.
I have a question about directors and members. Can they be one and the same?
They absolutely can be. So if we go back to our not-for-profit corporation structure here, I think if you think about a traditional not-for-profit or charity, let's say there's so many members, there could be like hundreds of members, and out of the members, you elect a board of, let's say, 9 or 7 or what have you. When there's a microboard, we're really looking at a very small number of persons. So you could potentially have 5, 6, 7 members of the microboard, depending on how many family members or friends want to get involved. But when you're electing your board of directors, you want to make sure you elect 5 to call it a microboard. It doesn't hinder you. You're not hindered from electing, let's say, 7 or 3. Just you would call it an incorporated personal support network, for example, rather than a microboard. Bella Canada has actually trademarked the term microboard, and for them, it's 5 directors. But I have had clients when I've incorporated microboards who've had 7 or 3 or 5 on the board. Just remember that under each piece of legislation, it's a minimum of 3 directors.
Okay, thank you.
Any other questions? Sorry, my video disappeared for a second there, but I'm back. Moving on from legal aspects, we'll get into the role of directors and officers, and I think we've already sort of gone there. But looking at directors are responsible for the governance, administration, and management of the corporation. We know that they're elected by the members of the corporation, as we just saw in our triangle diagram. Each piece of legislation, the CNCA, the Canada Not-for-Profit Corporations Act, and the Ontario Not-for-Profit Corporations Act, ONCA, have qualifications related to directors, and they're pretty general. Directors have to be an individual, they have to be at least 18 years old, and they can't be incapable of managing property. They can't be bankrupt. And I think the provision related to not capable of managing property is pretty important when we're talking about the person supported at the microboard, a person who may not have the capacity to manage property. It's a question we get often. If the person supported by the microboard doesn't have the capacity to manage property, they unfortunately cannot be a director under the law, but that does not prevent them from being a member of the microboard, right? A person who helps to elect the board of directors that oversee the management of the microboard. And in addition, when you're having your board meetings on a quarterly or periodic basis, it doesn't hinder you from having the person supported there either. I actually think it's helpful to have the person supported there because that's the person that you are supporting in making their decision making. So it's helpful for the directors to get to know that person and help have a role throughout their life. In terms of directors, we're talking about a fiduciary duty to the corporation. So directors are in a position of trust. This means that directors have to make decisions that are in the best interest of the corporation, which means their corporate interests have to exceed their personal interests. There are certain duties of directors that we'll go over in a lot of detail in the next couple of slides, but here generally directors have to act honestly and in good faith. They have to exercise care, diligence, and skill, manage the corporation, and obey applicable laws and governing documents. For officers, we know that officers are appointed usually from the directors. So if you've got your 5 directors of the microboard, you may appoint 3 of them as officers of the board. Actually, under the law, you can appoint officers from outside the directors as well, except for the chair. So the chair has to be a director, and you do have to appoint at least the role of the chair under both ONCA and the CNCA. However, if you wanted to have a secretary and treasurer, you could do that from amongst the directors or from outside the directors. The chair's role is to chair meetings, to head the board of directors, lead the board of directors. The secretary usually takes minutes and keeps records on behalf of the corporation or organizes records on behalf of the corporation. And the treasurer will manage the finances of the corporation itself. Again, because the microboards are relatively small, you don't have to appoint all of these roles. The chair you do have to appoint, but the secretary and treasurer are optional. We've had a lot of questions about board recruitment and succession planning. Like I mentioned before, you want to choose directors who you are able to elect or appoint right away and work with caregivers or family members who are starting the microboard to understand the person supported, and so they can transition into leading the microboard when caregivers age or pass away. You also want to make sure that directors have a personal relationship to the person supported, that they understand the way the person supported expresses themselves, and so that they can better support them in their decision making. And directors should also have an understanding of their legal obligations to the corporation. We'll get into this in a little more detail when we talk about duties of directors and officers, but often when we're talking about a not-for-profit and electing directors to the not-for-profit, it's a voluntary role. People do it usually very willingly and they're happy to do it. When they do it, they should understand that they do have a legal obligation to the corporation as well. And finally, you may want to consider whether to retain an independent facilitator when looking for your directors. I know we've got a lot of independent facilitators here today. I'll just turn it to Karen to say a few words about that.
Thank you, Saquiba. And I think many of you who are here tonight also attended the workshop we had a couple of weeks ago around the role of an independent facilitator. But just for those who weren't there, and very quickly, an independent facilitator, when it's hired to support the microboard, has a fairly different role in rather than its what an independent facilitator might traditionally be hired to do. So an independent facilitator would support the microboard by helping maybe organize meetings, by helping make sure a succession plan is in place, by sometimes taking minutes and kind of performing some of the administrative duties to keep the microboard moving forward. An independent facilitator can also help grow a network. If you do find that you need to have more people involved in a person's life, the facilitator can help do that. So and there's other things as well, but that's it in a nutshell. And it's a very distinct support role that it plays with the microboard. And I'll turn it back to Saquiba now.
I'm back. Thanks, Karen. So getting into delving more into the role of directors and officers, you wanted to get into the actual legal duties of each role. When we're talking about common law duties, which is my circle in orange here, we're talking about law that's been made by judges in courts in the English-speaking world over centuries, and common law really forms the basis for modern laws. When we're talking about statutory duties and liabilities, we're talking about common law concepts that have been enshrined in the law, usually under, for our purposes, federal and provincial systems. So getting into common law duties and liabilities, we know that directors have a fiduciary duty to the corporation, which is to act within the best interest or with a view to the best interest of the corporation. Under the umbrella of fiduciary duty, there's various other specific duties. The first being management of the corporation. So directors are responsible for all aspects of the corporation's operation. In fulfilling these duties as directors, they have to ensure that the purposes of the corporation are properly carried out, that the corporation doesn't undertake activities outside its corporate purposes. So remember when I was talking about the incorporation of the microboard as a not-for-profit, in your articles of incorporation, you'll have a set of purpose statements about what the not-for-profit will actually do, what the microboard will actually do. So it's the role of directors to ensure that these purposes are carried out and they don't act outside of those purposes. The directors also have to have or provide adequate authority for activities the corporation undertakes. By that, we mean amending the articles, the bylaws, or establishing governance policies. The director should set long-range objectives and strategic plans for the corporation, ensure financial stability, and manage the hiring and supervision of any staff. Another common law duty, or really the most important common law duty for directors of the microboard as a not-for-profit corporation, is the duty of care. This is where directors have to have a duty of competence or skill, which means they have to act with a certain level of skill and a duty of due diligence. This skill or diligence has to be performed according to a standard of care. I've listed the standard of care here, which is acting honestly in good faith and with a view to the best interest of the corporation. We sort of went over that when we were talking about fiduciary duty. And in exercising that fiduciary duty, they have to exercise a level of care, diligence, and skill that a reasonably prudent person would exercise in comparable circumstances. We'll get into the definitions of what care, diligence, and skill in a reasonably prudent person means when we talk about statutory duties. But that's the general standard of care under the common law. And the interesting thing is that under the common law, this standard of care, or this duty of care, is subjective, meaning that if a person has knowledge and experience, they're often judged at a higher standard than someone who does not. So for example, if you have a director on the microboard who is a lawyer or accountant, and there's some kind of issue with legal fees or accounting fees, then that director could be held at a higher standard than someone who does not have that knowledge or experience. The minimum level of care is a reasonably prudent person. What would a reasonable person do in these circumstances? And that's what you are measured against. Duty of loyalty, a director's sole interest, we talked about this again, should be towards the corporation. Personal interest cannot trump interest to the corporation. This means that directors have to act honestly and in good faith in the best interest of the corporation. They can't profit from being a director, and they can't be placed in conflict with another corporation or other persons. They have to avoid conflicts of interest. Another duty here, duty of obedience, to comply with applicable legislation and the governing documents. Again, by governing documents, we mean the incorporating document, whether you're incorporating federally or provincially. It's now articles of incorporation for both. So complying with the articles, with the bylaws, which are the general governing rules of the corporation, as well as any governance policies that the board might put together. And they have to ensure that those decisions are valid. This one is straightforward, the duty of confidence. You'll see the image on the screen, which describes it perfectly. Directors should not be divulging confidential information outside the microboard. So they shouldn't be talking to outsiders about, the personal information of the person supported, any financial information, or any other information. And then finally, a duty to continue. This involves resignation. So if anything goes wrong in the microboard and a director resigns, it doesn't absolve them of any liability. There's actually a 2-year limitation period typically. So if the microboard is sued, for example, and a director says, I'm out, I'm resigning, they could still be liable potentially for 2 years. If a director resigns of their own accord for personal circumstances or other reasons, they have to make sure there's an adequate person there to replace them when they are resigning. When a person does resign because they're trying to avoid personal liability, it could actually be considered a breach of their fiduciary duty to the corporation. Like we mentioned before, a fiduciary duty is putting the corporation's interests ahead of your own interests. And when you're resigning because you're trying to avoid liability, you're putting your own interests ahead of the corporation, and that could be a potential breach. So really, we're going over all of this to explain that there are duties for directors and officers that exist in the common law, and I'll show you how these duties are actually enshrined into legislation now. There are also certain liabilities under the common law, so if anything does go wrong and there's a breach of fiduciary duty that results in losses to the corporation, they could happen in a couple of ways. One is liability under tort law. Tort law means a civil wrong that's committed by the corporation under civil law, and the director's action contributed to that tort. An example of this is mismanagement, or what we call negligent mismanagement. This means that if a director, for example, permitted some kind of unsafe condition, and that unsafe condition led to personal injury of a worker, let's say, then the director could be found personally liable for that wrong, as opposed to the corporation itself. So any kind of direct action the director has had, which leads to a civil lawsuit or civil litigation, the director could be held personally liable. In terms of contracts, directors aren't usually held personally responsible if they sign a contract and something goes wrong, because likely they have the proper legal authority to sign that contract. But for example, if something is wrong with the contract, the director didn't notice, like a corporation is not identified in the document, or the director signs a contract with a non-existent corporation, then the director could potentially be found liable. So if a director is directly implicated in any kind of legal action or legal wrongdoing, then they could be found personally liable under the common law. Any questions on common law duties or liabilities before we get into statutory duties and liabilities? Okay. So moving on, like I mentioned before, a lot of the items that we looked over in the common law are actually enshrined into statute or the law, usually in both pieces of legislation related to not-for-profits, the Canada Not-for-Profit Corporations Act and the Ontario Not-for-Profit Corporations Act. There are specific offenses and penalties for acts or omissions committed by directors of a corporation. A director could either be found personally liable for any act or omission, or they could be jointly liable with other directors of the corporation. And really, all we're saying here is that directors should make sure they take reasonable steps to ensure that they've complied with the law. So similar to the common law duty of care, there's a general duty to the corporation. It's listed in, we've mentioned CNCA, the Canada Not-for-Profit Corporations Act in Section 148, and also in the Ontario Not-for-Profit Corporations Act, Section 43. So this legislates the standard of care that we saw under the common law, which is a duty to act honestly and in good faith with a view to the best interests of the corporation, and to exercise the care, diligence, and skill that a reasonably prudent person would exercise in comparable circumstances. I mentioned that we wanted to get into the definition of B, what exactly care, diligence, and skill means, and what a reasonably prudent person means. So we'll look at care, diligence, and skill first. When directors are acting within their duty of care, they're acting according to a certain standard of care. Practically, it means these things. So directors should be attending board meetings regularly. They should be informed about issues and decisions. They should review meeting minutes and financial reports. They should consult professionals when appropriate, be informed about the corporation's budget and finances, understand the purpose, so that's the purpose in your articles of incorporation, as well as your bylaws and other governing documents, understand their obligations as a director, and be aware of the corporation's policies. So really what we're trying to say here is that directors should be, when they are elected to the board and they take on this voluntary role, directors should really be informed about the corporation's governing documents, what the corporation is for. And when making any decisions about the corporation, whether it's finances or supporting a person in their decision making, they should really be informed about that decision, and attending board meetings and coming to the board meetings ready with that information. Directors should also be willing to go to professionals when appropriate. For example, a director could be found liable if they've made some kind of legal decision or accounting decision without that expertise or knowledge on hand. Just going back to this to remind you, we talked about the standard of care that's enshrined in the legislations. We talked about directors exercising care, diligence, and skill according to what a reasonably prudent person would do. Under the law, the reasonably prudent person differs a little bit from the common law duty. When we talked about the common law standard of care, we talked about a subjective standard of care, which means that if you have more experience or knowledge than other directors directly related to that action, so if you're a lawyer and there's some kind of legal action, or if you're an accountant, there's some kind of accounting issue, that you could be held to a higher standard. Under the law, under the CNCA and under ANCA, everyone is actually equal under the law. And so even if you have more specialized skills than another director, you're still all held to the same objective standard as opposed to the subjective standard under the common law duty. Directors also have this good faith defense under the law. So as long as directors can show that they acted with a view to the best interest of the corporation, that they did their proper due diligence, and that they relied in good faith on financial statements and statements from other professionals, then they do have a good defense in case there is some kind of action taken against them and they're found either personally or jointly liable. Any questions at all so far? Okay. Moving into another duty under the law, this is very basic. There's just a duty to comply with the act. So if you are incorporated under the CNCA, which is the federal not-for-profit legislation, or if you're incorporated under ANCA, which is the provincial not-for-profit legislation, then you have a duty to comply with the act, its regulations, as well as your articles of incorporation and your bylaws. This also mentions a unanimous members agreement, which is sometimes used federally, usually not in the case for microboards. So we talked about a couple of duties under the law. We also wanted to get into some of the liabilities. These liabilities don't just exist under the not-for-profit legislation, ANCA or the CNCA, but other pieces of legislation could apply here, and they're usually related to failure to pay if you have staff. So under CNCA Section 146 or ANCA Section 40, directors are jointly and severally liable to employees for debts up to 6 months' wages. So if you're not paying wages, directors are either liable personally or liable jointly and severally with the other directors. Under the Income Tax Act, if you are withholding any kind of payroll deductions or non-resident withholding tax, again, directors can be found jointly or severally liable. HST or harmonized sales tax, if there's any tax owing, HST tax owing, then directors could also be found jointly and severally liable. And again, related to workers and payroll, if you haven't been paying any deductions or remittances related to the Canada Pension Plan, CPP, or employment insurance, EI, then directors could also be found jointly and severally liable. Really, these statutory duties, I'll just bring it back here, relate to workers and the proper characterization of workers as either employees or contractors. We've often found, and I'm not an employment and labor lawyer, but we've often found that when you have someone on contract, for example, so someone who's contracted by the microboard to provide services to the person supported, if they're coming in on a regular basis and they're treated more like an employee and they're doing regular hours, they could potentially be characterized as an employee and you could owe them certain remittances, as opposed to contractors who do not have to pay any remittances to or make any deductions. I do believe we have a session coming up on the employment matters. Karen, is that right?
Yeah, it was last week, actually.
Oh, there you go. Perfect. So I hope you attended that. In the case that a director is found liable under the law, there's certain remedies, indemnities available to them. One of the remedies is dissent. This is a very basic one and something I think that's good for practice for any not-for-profit corporation. But if a director is not does not approve of the direction of a board, a vote, or a board decision, they should ensure that that dissent, that individual director's dissent, is written into the minutes. That serves as evidence that the director did not agree with the decision the board was taking or the direction the board was taking. And what's important to know is that even if a director was not present at a meeting of the board when a decision or vote was taken, that director could potentially still be liable. So in that case, it's very important when the director was absent to make sure they review any meeting minutes of the board and ensure that their dissent is written into the minutes for the next meeting. Dissent is the very basic form of remedy. The other way to go is the oppression remedy. This is when someone can go to court if they feel that they've been treated unfairly. So there's some kind of act or omission on behalf of the board, and the director feels they've been oppressed or unfairly treated, then they can go to the court. I would say that's the more extreme approach. In terms of indemnities, this is if there's any kind of legal action taken against a corporation, then directors can be indemnified for any costs, charges, or expenses related to that legal action. For example, an amount paid to settle an action. Funds could also be advanced to the director for any kind of costs, charges, or expenses. Again, this is only if directors had taken the appropriate duty of care or standard of care. So they should have acted honestly and in good faith with a view to the best interests of the corporation. And in particular, when the matter is criminal or administrative, they had to make sure that they had to have grounds to believe that their action was lawful. So usually some kind of indemnification clause is included in your bylaws to protect directors and officers in case anything goes wrong. This is allowed by the legislation, and I've got the sections of legislation here, federally or provincially. There may also be some kind of indemnity agreement that directors sign when coming onto the board. However, even without an indemnity agreement or without a provision in the bylaw, a director could still be covered by the indemnification clause in the legislation, again, if they've met the proper duty of care and they're found by a court to have done nothing wrong. In addition to indemnification, you may also want to consider purchasing insurance for your directors and officers. This is actually something we always recommend for not-for-profit corporations. It protects them against any liabilities in case something does go wrong. And usually you purchase the insurance as a package, so directors and officers insurance and general liability insurance. I believe the current price now for a year is about $1,200 to $1,500. Karen, I see you nodding. That's probably it. And Microboards Ontario does have a relationship with an insurance provider.
And we negotiated a slightly reduced rate for microboards in Ontario, so it's about $1,100 a year.
Right. So that's something we absolutely recommend for microboards and for any kind of not-for-profit or charity, getting that directors and officers insurance to protect your board. And finally, similar to the common law duty, a defense that's available to directors under the law is a diligence defense, reasonable due diligence. So again, directors have to ensure they take reasonable steps to ensure that they've complied with the relevant legislation, that they've exercised their care, diligence, and skill according to that of a reasonably prudent person. So we talked about that. And also that they've relied on financial statements from an accountant or other professionals. That even relates to legal opinions. Kathy just asked, how much did you say? So $1,100 approximately for the insurance.
Yeah, I can send you those details if you want, including the company that we've negotiated the deal with.
Great. And just one last reminder, we talked a lot about these common law duties and statutory duties under the law. Just something to remind everyone of is that you can't contract out of these statutory duties in either the CNCA or ONCA or any other piece of legislation. So you can't have a clause in your articles or bylaws or some kind of director resolution to say our directors are not, the laws don't apply to them, basically. And that brings us to the end of the section on statutory duties. Any questions there or questions there on the common law or statutory duties? I know it's a lot. I think we're good. Just a comment from me, and Kara, I don't know if you want to comment too, but I find that once people know this information, they're sort of scared to elect directors or to become a director of a microboard. And I think it's just a reminder of the legal obligations that a person has to the microboard, and to ensure that they take that obligation seriously. By no means is it supposed to scare someone into not being on the microboard, but they should understand the commitment that they're making to it. And going back to the very beginning of our presentation, it also speaks to that sustainability and buy-in piece, right? So if a director understands the legal obligations, they are complying with the legislation, and you know that they're committed to the board. Okay, so getting into our final piece here, which is the financial management piece. Just a reminder, this is building off of our post-incorporation requirements, that once you have incorporated a microboard as a not-for-profit, whether federally or provincially, you'll have some annual filings to do. The first is an annual return. This is under ANCA, or under the Canada Not-for-Profit Corporations Act, the CNCA, so federally or provincially. It's usually about a one-pager that asks you whether you've had an annual meeting that year and other general corporate information. It's relatively simple to fill out. Anytime there's a change of directors or officers or your office address, that also should be updated with the relevant corporate agency. So for example, if you're incorporated federally, you'll be using the online filing center for Corporations Canada. If you incorporate provincially, you'll be using the Ontario Business Registry, which is the new online database for all Ontario corporations. Either way, those two systems allow you to make these changes now online. Someone had asked previously about the pros and cons of provincial or federal incorporation. Like I had mentioned before, we used to say incorporate federally because it's so much easier because of this online system through Corporations Canada. But actually now, under the new legislation in Ontario, ANCA, the Ontario Not-for-Profit Corporations Act, the Ontario Business Registry allows you to make those changes online as well. So they're both pretty good. It really just depends on, I think, your annual revenue, like I mentioned before. And if you're operating solely in Ontario, it may be beneficial to incorporate in Ontario. Bylaws, anytime changes are made to the bylaws, and actually when you make your initial bylaws, you will have to file them if you are federally incorporated. Ontario does not yet have a depository of bylaws, so you actually don't have to file your bylaws provincially. So that might be another advantage actually of incorporating provincially. Anytime you do have a not-for-profit corporation, in terms of taxes, you will have to file a T2 corporation income tax return that's specific to corporations. Even if there's no income of the microboard, you'll still have to file a nil tax return. And as a not-for-profit, you may also be subject to the T1044 nonprofit organization return. There's certain criteria for that return, and it doesn't matter whether you are federally or provincially incorporated. The criteria is that taxable dividend, interest, rentals, or royalties in the tax year have to be more than 10,000. And the organization's total assets have to be more than 200,000 at the end of the immediately previous tax year. So those are the requirements to file a T1044. What we usually recommend is having an accountant at least look at your tax forms for the end of the year and to get assistance with that, unless you have someone on the board who's able to do it for you. Looking into financial statements, whether you're incorporating federally or provincially, there's types of corporations that you could be under each piece of legislation, which will determine your type of financial reporting to the relevant or in the relevant jurisdiction. Like I mentioned before, once you're incorporated, you'll be holding regular board meetings periodically. The board will look at the management of the operations of the microboard. You'll have to hold an annual general meeting for your members at least once a year, because it is called an annual general meeting. After you're incorporated, the first one will take place at most 18 months after incorporation, and then under Provincially, you'll have to have your AGM every 15 months. And federally, you'll have to have your AGM every 15 months, but no later than 6 months after the financial year end. Federally, when you're incorporated, the types of corporations are soliciting corporations and non-soliciting corporations. Provincially, they are public benefit corporations and non-public benefit corporations. I'll go through each type with you. We'll look at the federal ones first. So federally, if you are a soliciting corporation, that means you receive more than 10,000 in public sources in a year. The 10,000 includes government grants or financial assistance from government or an agency of government. It also includes donations from or gifts from a person who is not a member, director, officer, or employee, or someone related to them. So it's someone who is not associated to the corporate structure of the microboard. If you are a soliciting corporation, so you're receiving those 10,000 from public sources and you have less than 50,000 in gross annual revenue, then you could have actually the lowest financial reporting mechanism, which is a compilation report. Otherwise, you have to have a review engagement, which is a bit higher, a bit more comprehensive. If you have gross annual revenue between 50,000 and 250,000, the default is an audit. However, a review engagement is possible, and a review engagement is preferable because it's not as involved as an audit, as we all know. And then if your gross annual revenue is over 250,000, an audit is required for your not-for-profit corporation or your microboard. If you're incorporated federally and you don't receive more than 10,000 in public funds, or there's no annual revenue, then you are a non-soliciting corporation. The threshold here is much higher. So if you have a gross annual revenue of less than $1 million as a non-soliciting corporation, then a compilation report is possible, which is great. Otherwise, a review engagement is required. And if there's more than 1 million in gross annual revenue, then an audit will be required. For Ontario, and remember this is under the new Ontario Not-for-Profit Corporations Act, there's two types of corporations, public benefit corporations and non-public benefit corporations. Public benefit corporations are similar to soliciting corporations federally. So you are a public benefit corporation if you're a charity or receiving more than 10,000 in public funds. Again, the definition of public funds is very similar here. It's grants from the government or a government agency, or it's donations from someone who is not related to a member, director, officer, or employee of the corporation. For public benefit corporations, if the gross annual revenue is less than 100,000, you don't need, just a compilation report is fine, which is basically like a spreadsheet. You don't need an audit or a review engagement. For between 100,000 to 500,000 in gross annual revenue, a review engagement is possible, although the default is an audit. And for over 500,000, you do require an audit. For non-public benefit corporations, so this is not charities and not corporations receiving more than 10,000 in public funds, and you are incorporated provincially, then the threshold is 500,000. Less than 500,000, no audit or review engagement is required. And more than 500,000, a review engagement is possible, but the default is an audit. Essentially, what this means is that once you incorporate your microboard, depending on the amount of funds or source of funds, an analysis may have to be conducted to determine what your financial reporting requirement is. Questions there on the financial management piece?
Yes, I have one question on those. When I'm thinking of financial funding, I'm thinking of the ODSP, the RDSPs, the family managed home care. Do those classify, or are those the types of funding that would dictate your financial reporting structure?
It's a good question. What we're really looking at is funding that's coming into the microboard. So if you're flowing any kind of ministry funding or passport funding or other funding to the microboards, it's becoming part of the microboard's revenue, which is then distributed to the person supported by the microboard, that would count in your sort of umbrella of annual general revenue. But if the ODSP is going to the person directly, if payments from their Henson Trust is going to the person directly, if RDSP payments are going to the person directly, then those don't count in the annual general revenue of the microboard itself. It's whatever's going through the microboard, if any funds.
Thank you.
So when you say through the microboard, if the microboard is paying staff using passport funding, does that mean that money is going through the microboard?
Yes, usually what you'll have is you'll set up an account for the microboard itself, right? So it'll be a corporate bank account for the microboard as a not-for-profit corporation. Funds will go into that account. So potentially the microboard is signing on to agreements with the ministry or whoever else to get the funding to the microboard, and it's pooling into that account. So then if the microboard is paying workers from that account, that's part of its revenue.
Okay, thanks.
Any other questions at all? Okay. So that actually brings us to the end of our presentation. I'll put up our contact information here, and then happy to answer any general questions